Hello, everyone. Welcome to Smart Investing. I'm Albert, your host, and today we're going to be doing another set of 5 bank stocks. So let's begin. Again, this is in no particular order. So we're going to start from the bottom all the way to the top, like we always do. And when I do this, hold up. So when I do this, again, we're going to be doing a fundamental analysis and technical analysis. So the first stock that I have is FNLC. This is at $30.06. So looking at the first page here, let me move the timer real quick. Apologize for that. And let's do that. So this is a $331 million market cap company. And we're going to look at the 52-week high and low. So that's at least a $10 difference, which is not bad. Earnings per share, pretty reasonable. And the stock does pay a dividend. So I'm looking at this. So again, this plays a factor, but I mean, sort of. Not as much as this. Obviously the dividend. And this. Also, these are other factors to evaluate the company. I'm still learning those. So I've seen these two. Sorry. Seen this one and this one. So I know more or less. I'm starting to learn more or less about those factors to evaluate it. So from what I'm seeing, the stock looks okay. So now we're going to look at, it seems like it's undervalued for what I got using the PE. And then I'm going to look at the chart real quick. I'm going to look at a 5-year. It looks like it's holding up pretty good. Again, it looks like it's holding up, still paying dividends. This is very, very volatile. As you can see, a lot of up and down moves. And again, this was like the past 3 months. As you can see here, the past 3 months. And then if you can see here as well, you see a drop here. You see another little drop here, another drop here. Then you see this drop here, kind of flat. And then now you have all these, pretty volatile ever since May. So again, it looks like it just looks flat to me. It looks flat, but it's still holding up, which ain't bad. So, I mean, technically this is not a bad stock. But just the volatility, I mean, you had a drop here, and then you had a drop here, you had another drop there. And they're pretty much close together. So you're talking about at least once a month. So how big of a drop is this? So let's say from $20.40. So that's at least $1 drop. So from here, $27.80 to the top of $30. Again, that's another dollar move. Then down to like $28. That's like a $2 move. These are big moves. And the reason I say they're big is because it's a short amount of time. And then for a cheap stock like that, especially. So for a stock like this, these are big moves for a small price stock. Moving on to the analysis for the Quants. So they have a 5.6 overall rating. Highest rating that they have is a 6 for quality. I can pretty much agree with that. Momentum, income, and I would say some value. I mean, I would give them some credit for value because it seems like the stock is holding up. So they're doing something right. Now, we're going to look at, hopefully we can get annual results, even though it's pretty laggy or not showing me. So anyways, again, it's not showing me revenue or operating income, but the net income it is showing me. Debt is pretty high, like always for banks. Cash flow is at 56, so a little over 200. They got decent cash flow. It's positive at least. And now we're going to look at the dividends real quick. So are they paying dividends? Rising dividends? And yes, they are. This stock ain't too bad. It's not too bad. The last split was in 2004. So I'm going to say yes for a watch list for that company. Next one up is Gabc. So Gabc, we're going to look at the 5-year. First, we're going to look at the first page. And so 52-week high and low, difference of 10, not bad. Earnings could be better compared to the last stock, especially compared to the last stock. Slightly undervalued, not as much as it should be. But we're going to see if this stock is holding up. The stock seems okay. So I had a run up of as high as like close to $49 in April of 2021, and it has dropped since. So from a chart perspective, it needs to do better. You can see these drops here. It looks pretty flat here. And then from here on, it just kind of went down, went up again, but then it went even lower. So at the start of, I'd say April, late March, and again, mind you, in 2022, in January, a lot of stocks were doing horrible. And even for that first quarter, January through March. And this stock held pretty well for the first quarter, to be honest. It stayed flat. Did better than most companies, I bet, while a lot of companies were flushing down the toilet, flushing their prices down. But then it finally caught up in April, as you can see, and then it's slightly fighting back. It went up again in about June, but then it went right back down again. So it's back to lower lows, and that is definitely not a good sign. So we're going to look at the next page. We're going to look at what else we have going on, and that will be the analysis. And so I don't look at analyst estimates or ratings or anything. Just, it's not really important. So we're going to move on to the quant rating. Like I said, quality, it needs some work, but that's a really low score. I didn't expect that to get a 2.8. I expected maybe more or less around a 4. more or less around a 4 out of 10. But to rate it 2.8, I think that's slightly low. So that's a little too low. So for the highest rating they have was for income, which came in for 5.3. So the other ratings were growth, which ranked a 5, and momentum ranked a 5. So we're going to look at the income, which was slightly above the other ratings for all the other factors. So we're going to look at cash flow real quick. Let's see something. And they're doing pretty decent on cash flow. So now we're going to look at the balance sheet. They need some work on the balance sheet. I mean, it's okay compared. I mean, it's what I want to say is a lot of these banks are like 90% debt. And so looking at this company, it's only off by 2%, either the high 80s, low 90s in debt. It's just not good. You rarely see companies like even in the low 80s. So, I mean, this is what I'm saying is pretty typical. Seeing this is just pretty typical to see for a bank. Like I said, it's slightly better, but it's not much of a difference. Again, I don't have any results for the income statement, so I can't really say much on that. And then here, this thing looks frozen for the key indicators, which I really do like to look over. So I have, for the key indicators, I have nothing, and the income, I have nothing. So for their earnings estimates, it looks like they're doing fine. And we're just going to look at their income. So they do pay rising dividends, at least 2 cents a year. As you can clearly see that. So that's not too bad. They rated that a 5 for the income. I mean, it's okay. So for this stock, I'm going to say no. It needs a little bit of more work. So next one up is LEVL. So we have weird. This is pretty weird. The reason I'll say that, I'll explain in a minute. It's holding up pretty good, which is really good. But what I want to say is, hold on. So we see here, ever since pretty much in November, it's pretty much remained flat. So then when you look at the last 3 months, it's been jumping up and down to fight the price range for at least $2. At least the $2 price range. But what I don't get is the whole volume. I don't see any volume on this stock, which is weird, unless during market open hours it's totally different and this stock may be active. I do like the range on it. I like the 52-week high and low. I do like that. Earnings I like. Dividend, they're not paying too much, so I'm going to say no. Let's do that again. So dividends, I don't like it for income. It's undervalued. Again, I do like the range, 52-week low and high. I do like that they're earning pretty good. So the stock is pretty flat. It's not an income, so can it be used for growth? Honestly, it's hard to say. And then again, the past 3 months, it just looks flat and volatile with that. It's like up and down here. You can see what I'm talking about. You know, it went up, then went down, then went up, down, then going down again. Very volatile stock. I don't think people can stomach that when they like to invest. I mean, it's got potential, you know, by looking at the numbers on the first page. But, you know, when I look at the chart here, when I'm looking at the chart, it just doesn't support it. So with the chart, we're going to look at, hold on, we're going to look at analysis real quick. I have nothing for quant ratings. So we're going to look at the history of dividend payments. So we're going to look at that. Hopefully, so they're paying rising dividends, what, like a penny? I'm not too crazy about that. But they haven't made splits on the stock. So for this one, I'm going to say no, just because it's volatile, you know, and it just needs some work. You know, it was doing okay, and then understanding the market is like that, but those are wild swings. Those are very strong wild swings. So I have two companies left, and we'll wrap this up soon. So next stock is Lcnb. Looking at a 5-year, it's dropped down a lot from, obviously, its 2022 high in January. And so it's dropped down only like $4. But even then, this is not a stock to make a lot of money on. So again, ever since January, it's gone from 19, close to $20, all the way down to 15. So you're losing about $1 a month. So for the year, it looks like it's doing bad. And even on a shorter time frame, it still looks like it's doing bad. Let's see what it did for the past 5 years. It looks pretty flat for the last 5 years. Now let's look at the first page. So it looks like it's undervalued. It is not in the range of $10, so that's definitely a bad sign. This is undervalued. I like that, but only when it's worth it, you know. Earnings are pretty low. Dividend, I don't like it. I know people do like yields, but I don't care about it. I could care less, but people do like yields. So overall, I'm gonna give it a no so far. And then analysis for the quant ratings. We have the highest rating for it is at value, close to an 8. So we're gonna see what the value is about. They must be giving rising dividends. Wonder why it's value. So stock split in 2007 and 2004. And again, for some reason, I don't know why, this company is liked. The market cap I'm not too crazy about, and the volume is horrible. But they do pay, I think the people like the yield. I think that's why. People like seeing the yield. So let's see if we can get annual. Okay, we do have an annual. So cash flow per share. Book value has gone up. So this is pretty flat. So it looks like the right here 87, the debt levels slightly gone up. I wouldn't go too far as trying to get to 90, but it looks like it's trying to get there, which I don't really like. Their earnings are doing better, and ROE and ROA look okay. Net income, see, and I don't have nothing for the income statement. So again, not my fault, but I do apologize for me not showing you. So balance sheet looks okay, typical for a bank. And so we're gonna see if this company has cash flow. So at 175, so we're down about 32. So they're negative on cash flow. So I'm gonna say no to this company because of their cash flow. So I'm sorry, LCNB, but you gotta go. The only one I said yes to was this one, and these are all no's. So last but not least, we have WRLD, World Acceptance Corp. So they are valued at $106. So that's pretty pricey. 52-week high and low, definitely a big difference. Earnings per share 8.5. They don't pay a dividend, so that's nice. They can use that money instead to grow the company. So right off the bat, I like what I'm seeing. And again, I know this is pretty expensive. This can be a problem for so many people. But again, it looks like it's slightly undervalued. But based on the chart, it looks like it's undervalued a lot. So people do like this stock, especially people that are trading the stock. They really tend to like it. So the highest rating that they will get is quality. I'm gonna look into that real quick. So their earnings are expectations doing slightly worse than expected, but it's not a major factor that you can say, wow, like they need work or something. So again, this is not a bank, it's under the consumer lending company. So we're gonna look at some results or estimates, as you want to call them. So ROA, ROE, earnings per share, their margins have gone down. Earnings have gone down a lot from 2021 to 2022. The debt is pretty low compared to a bank, but they're starting to gain momentum on their debt, which I don't like. So we have here a standstill for their ratings, except the cash reserve per share. So now we got net income 53. Revenue remained about the same, and their operating income went down a lot from 2021. So the balance sheet for WRLD, so they're at 70% debt. It's pretty high for consumer lending. It looks like they're trying to run it as a bank. I mean, you never want to see debt go up. Banks are the only ones that love doing that for whatever unknown reason there is. But we're going to look at the cash flow. So we got 182, 281. So we're looking at least $460. Is that right? They're pretty much breaking even with the cash flow, which ain't bad. I mean, I'll take that any day of the week. So for this stock, I'm going to say yes, just because so I said yes no, 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 and then yes. And that was me stating from bottom to top. So again, with WRLD, they do short-term loans in small installments. So the reason I do, and I did say yes, is because it's a pretty active stock. I guess traders do like it. The company itself seems like they want to reinvest in the company instead of paying out dividends. So I've never heard of the company, and hopefully they do good. So I hope these evaluations have helped. If not, like, comment, subscribe. Again, I'm gonna keep continuing to evaluate so many companies. I've been doing this for a few years, so I got way more companies to go. From small cap to mid cap to large caps. So there's always so many stocks to be looking at and to actually evaluate, because you never know when you might find a good stock that's unheard of, and you're the first one to get in on it, and that's always a good thing. So thank you guys for watching. I'll see you guys in the next one. I'm gonna go to sleep. I'm getting a little tired, and I'll see you guys in the next one.